Ladies and gentlemen, welcome to August 25th, 2020 daily update with Invest with Alex. We're looking at a 180-day chart for the S&P, and as you can see, we are getting very close to our ultimate target, and it appears that September 1st plus or minus one trading day will be indeed the time turning point that will complete this particular move. So we are approximately we're 16 points away. 16 points away from the price window of 3,480 plus or minus 20 points, and we're approximately 40 points away from the exact hit on the line. The Dow Jones is falling behind a little bit in terms of what we would like to see. I'm not really sure how to explain that at this point in time, other than to say perhaps it's going to play catch up over the next few trading days in order to get to that 29,200 level plus or minus, in order to complete the mathematical calculation, but it will have to get there. Perhaps the S&P will go slightly above the line towards that 3,500 level. So we'll see how it plays out. There's a lot of divergences in the market, so perhaps that's going to be one of them. And as soon as that happens, that should complete the bounce pattern, the bull market pattern, depending which index you're looking at, and the market should roll over and accelerate down. At this point in time, I'm still maintaining that it is possible that we move down rather rapidly into our October 4th time turning point. If the top does not arrive on September 1st, for example, or if we're not accelerating down or essentially crashing into the middle of September, then we'll have to adjust our forecast and kind of determine what that October 4th time turning point represents. But for the time being, I'd like to maintain that forecast. So everything is kind of lining up for the top to arrive very soon. And of course, the fundamental picture continues to deteriorate significantly, and it's just what we're witnessing is once again historic from the market perspective, from the valuation perspective, and of course all of that is due to the massive distortion caused by the Federal Reserve. Let's look at some of the charts. So we looked at S&P, we looked at Dow Jones, VIX is not really doing anything, just kind of sitting there. Once again, it's probably going to close this gap before it's all said and done. And once the tops are in and the VIX has closed this gap, perhaps we're going to see that massive move higher. So if you're looking for a highly speculative position, perhaps you want to consider call options in the VIX at exact juncture where we anticipate that particular bottom or the top on the S&P. So gold is not really doing anything, just kind of sitting there. So is the US dollar. No new information. TNX, or the 10-year Treasury, had an interesting move here. So as you can see, we sliced through this line. This line is most likely not properly sliced, but it is somewhat important in terms of giving us an indicator. If we begin to break out here and go higher, it would suggest that the bottom is in terms of yields, and the market is surging, or the yields are beginning to increase, perhaps substantially, and that would be yet another confirmation point for our overall forecast of the market declining substantially, the US dollar and everything else. So that's what we're looking at. Not much has changed. We're simply kind of drifting or melting up, as some people would say, into that top. One more thing I wanted to show you is Tesla and Apple. So Tesla is not the primary driver in terms of the indices, but it is one of the primary drivers in terms of the speculative interest in the stock market. And I actually sent this chart out to a very big hedge fund who has a massive short position in the stock. But basically, this particular pitchfork suggests that the Tesla has just topped out and beginning to decline. And so far, this has been the case. Whether or not it challenges this line one more time, which is likely, is probable. But this is yet another confirmation point that one of the most speculative companies is topping and perhaps getting ready to collapse. By the way, the fundamental picture of this is rather astonishing. So it went up from $400 a share here at the bottom, or $350, to over 2,000, and nothing has fundamentally changed for the company. If anything, the fundamental picture has kind of fallen apart, if you will. They have too much competition now, as you know. They have the overall economy is imploding on itself. Who's going to be able to afford these cars? It's just rather crazy of what happened here. Nobody anticipated this, but here you go. But anyway, it's for our purposes, it's acting as yet another confirmation point that the market is topping out, because one of the most speculative companies is topping, at least according to this work in this pitchfork. And another one is Apple. So Apple is the primary driver of this market. And as you can see, we had to ship this pitchfork, but this one is should be very important resistance levels for the company as well. And we came very close today. It's consistent with our expectation that the S&P and the Dow will go a little bit higher, Nasdaq as well. And this is where we should see massive resistance and the completion of this bull market for the Apple company as well. And once again, there's no fundamental reason for this company to go up so much, other than pure speculation. But at least fundamentally speaking, it is much more much better off, let's put it that way, than Tesla. Anyway, that's it for our update for today. Thank you very much for your time, and have a wonderful day ahead. Bye bye.